Hi, my name's Jason. I'm the managing partner of iChoice. Look, we look after a whole range of clients here, from medic specialists to businesses, and of course first home buyers. This little clip's to the first home buyers, and particularly about the family pledge product. So not everybody's lucky enough to have a parent who has some equity in a property in this country who can go guarantor for them to help them buy a property, whether it be to live in or to rent out. But where you do, it's a very powerful product. I know when I bought my first property, my parents using the equity in their home to help me acquire that without having to borrow more than 80% saved me a bomb in lender mortgage insurance. Don't get me wrong, if you don't have that support available, LMI is a necessary evil. But gee, if your parents do have a property that can support you when you're borrowing, that's something you really need to understand a little bit more. A lot of parents or siblings who you might ask to go guarantor probably don't understand that it is a limited guarantee. That's limited to a dollar amount. So if somebody's buying a property for $1 million and they want to borrow the whole $1 million, so zero deposit down, the parents who go guarantor are only going to guarantee the $200,000 deposit that the bank would otherwise want them to have. So it's a limited guarantee. In the event of foreclosure by the bank, the guarantors are only allocating a certain amount of $200,000. Now that's really powerful. It's a lot cleaner than parents lending their kids money, all right? Because I don't know the legalities of that, but there needs to be some kind of debt arrangement there. Otherwise, in the event of them driving an unlicensed vehicle or getting sued one day or going through a marriage breakdown, that gift to them is very unsecured and it can disappear. I think it's a lot cleaner for parents to understand this product, and their name is not on the loan, their name is nowhere. The only time they'd ever be contacted by the bank is in the event of a default. And even in which case, you would hope that the sale of the property of the applicant would more than cover out the loan. The other big thing is that when you get a guarantor to help you out buy a property, the minute down the track that your loan represents 80% of the property's value, the guarantee can be immediately released. And we have access to auto valuations every 3 months if we like to make sure that we're hitting the nail on the head as soon as that's the case. In other words, if somebody purchased a property for $1 million and borrowed $1 million, the minute that property is worth 1.25, or the property is worth not quite that high, but they've managed to pay the loan down a little bit. Anyway, as soon as you're at 80%, we release the guarantor and they've done their job. So often I get asked to talk to parents who are providing limited guarantees, and I love doing that because the minute they understand its limited nature, plus the fact that it's temporary nature, plus the fact that how expensive LMI can be for young people, it can be $25,000, $30,000, they soon come to the party and often are in a position to help. Thanks so much for listening, everybody. My name is Jason Curry. I'm contactable in Sydney on 02 9743 0000. Ciao.